Hello. Today is November 2nd, 2024. I'm Jason Shapiro with crowdedmarketreport.com. Today I was going to talk about the idea of market tone and tape reading, which to me is one and the same and goes together. All right. And for me, what market tone specifically means is the idea that the market should rally strongly on good news if it's in a bull market, and it should do a good job of fighting off bad news if it's in a bear market, meaning the market shouldn't have any kind of radical move down with bad news if it's in a bull market. And the opposite is true in a bear market. It shakes off good news and doesn't go up very much, and it goes down a lot when there is bad news. That, to me, is market tone in a very general sense. And you use this market tone to try and read the tape, as they say. What is the tape telling you about this market tone? Okay, so I bring this up because there was a good example of that this week. On Wednesday, we had some economic data come out, GDP, and as well as some good earnings from some of the big companies out there in the world. And this data was very Goldilocks-y, which is what the market has really liked for the past, year and a half. And we got that. And the stock market went up on that, as you can see. And by the end of the day, it failed and closed down, which we haven't seen in a while. We don't see the stock market go down on Goldilocks-y type of data. And that's exactly what happened. And that's a change in market tone right there that I think is important. And I did, in fact, make a video on Wednesday and post some stuff on Twitter saying that at the time. And then, we had follow through, obviously, to the downside on Thursday. And we'll see what happens here. But from a trading point of view, when you have a market tone move like that, like if you're looking to be short, you get short on that. That's a market confirmation. Here's the market saying, look, good news is no longer good news. So therefore, the risk return is skewed the other way at this point. If we were to go through those highs of that day, of that market tone day, change, then you can say, okay, it's wrong. It was just a short-term market tone move, which happens all the time, right? And it's wrong, and you get out of your short, and you're risking very little, right? And that's always the idea, is to risk a little to make a lot. If that market tone ends up being a good sign, and things switch from here, and the market goes into bearish phase from here, well, you can make, quite a bit on the way down, and you're losing this small amount. You make a lot, that's what we want to do over time. But that's kind of how I see market tone, right? And another good example of this, truthfully, was in the bond market. This was the day that the Fed cut rates 50 basis points, okay, which was more than expected, right, here. And bonds went down on that. That was a switch in market tone, obviously, right? Bonds and fixed income are going up in anticipation of the Fed cutting rates. They ended up cutting rates more than expected, which should theoretically be bullish bonds, and bonds went down. And that was a change in market tone right there. And look what's happened since. Now we're sort of in a fiasco of a bond market, but it was all given as a tell right there, right at the top there, all right? So this is what I look for when I'm looking for sort of changes in how the market's changing, and therefore a possible change in trend. And I think it's important. So I hope that helps. I always talk about how it's the market that should tell you where things are going, and not you telling the market where things should go, right? And this market tone stuff is exactly that. It's trying to get a grasp on how is the market telling you where things are going. How is it reacting? That's how it's telling you. How is it reacting to what should be seen as good news, or what has been seen as good news? How is it reacting to what has been seen as bad news? And I know I've talked about this one before, but I'll give you one more example. How is it reacting to bad news? This right here was a CPI day at the end of 2022, right at the bear market bottom, right? Was here. This was the CPI day, right here. Okay. And the market had been falling all year on higher CPI numbers. The market didn't like the inflationary numbers. And that day, in October of 2022, you had the highest CPI number of the entire year, higher than what was expected to come out that day. And what happened? The market went down and it reversed and closed up. And as it turns out, and that was the low for the entire bear market, right? Again, a change in market tone, a change in the way the market is reacting to this news is a great sign. All right, and I could show a million examples. Listen, I could show plenty of examples where it also gives a false signal, but something to keep your eye out for, something to keep your antenna out for all the time for this market tone stuff, tape reading stuff. Okay, I hope that helps. Please like the video if you like it. Please check us out on Crowded Market Report and our many forums, including our Substack, which is free, and etc., etc. Please, happy to hear questions and comments about this. And I hope everyone has a good week. Thank you.